Hey everybody, Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist podcast, where we feature questions from you, the YFP community, to be answered by one of YFP Planning's fee-only certified financial planners. Before we jump into today's question, I want to give a shout out to YFP Planning's incredible team that makes this segment possible. YFP Planning offers fee-only comprehensive financial planning that is customized to the pharmacy professional. Whether you want to optimize your investing plan, pay off debt, or simply build a solid financial plan, YFP Planning can help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. All right, this week's question comes from an individual in the YFP Facebook group, and they ask, I opened a life insurance policy for my daughter when she was born through American Family Insurance. It was for 10-year payments, so the policy is all paid. What are my options? American Family Insurance said I can't do anything with it further, but I want to invest the money or do something else. It's for $25,000. Tim Baker, what are your thoughts?
Yeah, so anytime I hear something called, like paid up, I think permanent insurance and in particular whole life. So this
Mm-hmm.
is one of the ones where, like, when you say, "Hey, you can't do anything worth it," I'm kind of cocking my head and be like, "That doesn't sound right, Tim." So I definitely would want to see the statement and just learn more about the policy that's there. So th- just to kind of back up, when we talk permanent insurance, what we're typically talking about is like not insurance. We're talking about a policy that, when you pay the premium, part of it goes towards the life insurance to cover the life of your daughter, and then the other part,
Mm-hmm.
it goes to like a cash value portion that you should be able to access, which is one of the reasons that I'm just kind of confused by the question. So, and contrast that with term, Tim, where basically all of the premium goes for the life insurance uh,
Yeah.
policy. So there is no cash value. There's nothing to access. So it's basically a very much stripped down policy. It's just for the cover of the life. So the definition of a paid up life insurance policy is that when the policy is paid in full, it remains in force regardless of what you do. Like, you don't have to pay any more premiums. So it stays in force until the insurer's death, or if you terminate or surrender the policy. So that's where I'm thinking, like, where American Family Insurance is like, hey, no, you don't have to do anything from here. But it sounds like maybe there was a miscommunication. So when you get to the paid up status, Tim, um,
Mm-hmm.
basically you've accrued sufficient level of cash value for you not have for the policy owner not to have to pay any more premiums. So what the insurance
Mm-hmm.
company does is that they actually use money from the cash value that's accrued within the policy to pay the premiums on your behalf. The
Mm-hmm.
problem with that is that so moving forward, you're not the policy owner is not responsible for basically paying any more premiums. It's basically I look at it as like the policy's eating itself type of thing.
Yep.
The
Yep.
problem with that is that the death benefit, that 25, I'm assuming the death benefit is 25,000. The death benefit gets reduced proportionally to the amount of cash value used to cover said premiums. So basically, once you get to that paid up status, the longer that the insured lives, the lesser the death benefit would be. So, if the policy doesn't get paid out, maybe in the future, it's not $25,000, it's 23,000 because $2,000 were used from the cash value to pay the premium. So basically, to answer the question of like, what are your options for this types of policy, you really should have access to that cash. So depending on the policy, there's really four options here, Tim. The first one is kind of off the table with in terms of what to do with the cash value, and that's you can use the cash value to help pay premiums. We've already kind of got to that paid up status, so we're good to
Mm-hmm.
go. The second option is that you should be able, as a policy owner with a permanent life insurance policy, you should be able to make a withdrawal from the policy. You should be able to withdraw against the cash value and do with it whatever you'd like. It's a tax-free withdrawal. The only caveat here is that if the withdrawal exceeds the amount you've paid into the policy, it could be taxed as income.
Mm-hmm.
The third thing is that you could take out a loan, which again, typically if you're going to invest the money, you're going to withdraw and invest it. You're probably not going to take a loan to invest it, but I guess you could do that as well. And then the last thing is that you can surrender the policy, which is essentially cancellation. So there's no more coverage on your daughter. You'll probably get, charged some surrender fees, some surrender charges. So I would be cognizant about that. And then you could also be taxed on what you receive, depending on what that looks like. So there's definitely something wonky going on here, Tim. I don't there are options with this type of policy, especially if it's a paid up permanent policy. I would definitely want to look at the statement. I'm
Hmm.
assuming that there's a kind of a breakdown in communication where they're saying, when they say I can't do anything with it further, I think that means like you don't necessarily have to pay any premiums, but
Right.
if the question, the next question is like, well, I'd like to access the cash, and then they should be able to help you with that.
Hmm.
So that would be kind of my initial thought related to this question.
Great overview with the information that we have from the question. I think for the individual asking the question, follow-up communication, as Tim mentioned, is certainly warranted if we're following correctly in terms of what those options may be, and just understanding that you do have options. Tim, this is something we see fairly often. I know on the planning team, I've heard you and the other CFPs talk about where individuals may come with a whole life permanent policy. And sometimes it takes unwinding that policy, looking at these options, reading through way too many pages of information to try to figure out what exactly are those options, and how can we evaluate those given the rest of the plan.
Yeah, it's definitely one thing that we assess. A good majority of the time, a permanent policy doesn't necessarily make sense, but then kind of going forward, what's the best way to um, handle the policy within the context of the rest of the financial plan. It
Yeah.
just can be like super confusing, right? I kind of, I
Hmm.
don't want to equate it so much to like the student loans. When you call the student loan companies, depending on who you talk to, you'll get a different answer. It's not that bad, but when you're looking at statements and fine print and surrender charges, it can kind of get a
Yeah.
little bit stressful. So
Hmm.
definitely, these are big decisions related to policies that you've paid into it for at least 10 years. So making sure that you have some kind of some non-biased advice in your corner, I think is important.
Yeah, and for those that want to learn more on this topic, certainly an important part of the financial plan, we've got a pretty extensive blog post slash mini e-guide on the website, Life Insurance for Pharmacists, the Ultimate Guide. So we'll link to that in the show notes so folks can learn more about the different types and variations of life insurance, which Tim covered briefly here on the episode. If you're not already a part of the YFP Facebook group where this question came, I hope you'll join a community of over 9,000 pharmacists all across the country that are asking questions like this, helping one another out, sharing some of the wins that they have along the way with their financial journey as well. We'll link to that group in the show notes as well. And if you have a question, we'd love to feature it on an upcoming segment of the podcast of this segment, the Ask a YFP CFP. You can send us an email with your question at info@yourfinancialpharmacist.com, or you can record your question by going directly to yourfinancialpharmacist.com/ask YFP. As we wrap up this episode, an important reminder that the content is for informational purposes only, not intended to provide and should not be relied on for investment or any other advice. For more information on that, you can visit yourfinancialpharmacist.com/disclaimer. Thanks so much for listening. Have a great rest of your week.